Market evolution. What the last decade taught us. 10 years ago, the prophecies sounded like conspiracies. If you go back to 2014 or 15, the headlines were filled with warnings that most people dismissed as noise. Excuse me. We heard talks of a shifting global trade map, warnings that liquidity would be would one day be used as a weapon, and whispers that old rules of investing were quietly dying. Back then, the majority ignored it. They stayed comfortable, but today, the noise is our reality. What what were once French theories and now the front page headlines of the Financial Times and the Wall Street Journal, the evolution of the market hasn't been a sudden explosion. It's been a slow, methodical burn. And if you weren't looking at the right metrics, you missed the transition entirely. Think back to the skeptic wall of a decade ago. If you had suggested in 2015 that the dominance of the petrodollar would be openly challenged, or that regional trade blocs like BRICS would be actively expanding to include some of the world's largest energy producers, you were labeled an alarmist. If you had said that traditional bonds, once the safe haven of every portfolio, would be would face volatility typically reserved for tech startups, you would have been laughed out of the room. But then we hit the pivot point where it was the supply chain shocks of 2020 or the unprecedented weaponization of the global financial system that followed. The evolution accelerated. We moved from a world of just-in-time efficiency to a world of just-in-case resilience. And in that shift, the rules of the game changed forever. Looking back at this decade of transformation, there are three great lessons that every investor must internalize if they want to survive the next 10 years. Lesson 1. Liquidity is king. In the old world, we chase growth at all costs. In the new world, it's all about access. We've learned that the movement of money is no longer guaranteed. If you don't have liquidity when the gates close, your valuation doesn't matter. We are now in a market where the flow of capital is just as important as the underlying asset. Lesson 2. Geopolitics is the new fundamentals. You can no longer analyze a stock, a commodity, or a currency by looking at a balance sheet alone. You have to look at a map, whether it's conflict in the Suez Canal or a new trade bypass in Eurasia. Geography is now a primary driver of peace. If you aren't a student of history and geography, you aren't a complete investor. Lesson 3. The death of the safe bet. The classic 60-40 portfolio, the bedrock of retirement for 40 years, is being rewritten in real time. The last decade taught us that low risk does not mean no risk. Inflation, currency debasement, and shifting alliances have turned the safest assets into some of the most vulnerable. So where does this leave us? History doesn't always repeat, but it definitely rhymes. As we look back, the next decade The evolution is far from over. We are entering an era of multipolar markets. In the next 12 to 24 months, watch the settlement currencies of global energy that is the canary of the coal mine. The shift from a single reserve world to a fragmented, regionalized system is the most significant evolution of our lifetime. The question I have for you is this: are you still playing by the rules of 2015? Are you still watching the charts in a vacuum? Or are you watching the world? The evolution is happening, whether we are prepared for it or not. I want to hear from you in the comments. Which prophecy from the last decade surprised you the most? And what are you bracing for? Once again, I'm Ro for The Real Shift, just asking you to roll with me as we dive into some of the biggest issues of the world right now. And also, we greatly appreciate your comments. We'd like for you to share this if it's possible. And if you like what we're saying, just give it a like. We're not asking for money or any of that, just to support, to keep us, keep us engaged. So please and thank you. We appreciate your time. And we'll keep going until next time. Thank you.